The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 6th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. And of course, if you're inside the Tiger's Den, and you should be, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here with a move to the downside. Dow's off 378, S&P 64, 410 for the NASDAQ 100, 33 for the Russell. Gold is off 30 cents. Silver's down 30 cents as well. How about that? We've got light sweet crude down 43 pennies, natural gas up 8 cents out there. So where do we want to begin? I think where we begin. So here we got the XLK. Let's just start here and then we can move over. So, you know, daily's got a TD9 count. Top XLK kind of represents, well, first the 36, 37% of the S&P 500. So you want to know what's going on here. So the daily has a TD9 count top, and price has been below the bottom of its bullish structure daily profile for 3 consecutive sessions. So it has a bearish profile change in trend. What does that mean? That means that price should target 281.90. That is its breakout level. Now, it can't get to 281.90 until we see price close below its green oscillator and change line. That's right. It's got to close below it, not just trade below it. But right now, that level to be watching today is 288.43. So that is going to be a support level. Now, you can easily see price getting back, not today necessarily, to the 281.90 area, touch that, close back above its oscillator and change line. If it does close below its oscillator and change line, again, 288.40 is the number right now. Then we'd be looking at a potential move to the 276 level. That's the bottom of its bullish structured weekly profile. The monthly at this stage here, not really. So on a 30-minute time frame, we don't see any kind of a bottom signal as we speak. So it looks like it wants to continue to move lower, but we'll look at the equity future contracts as well, see what they are signaling to us. In fact, let's do that right now. Let's take a look at the daily time frame, daily equity future contracts. Yesterday, price got back for the ES-mini, got back inside its profile by a smidgen, still got back inside there, suggesting that the prior day's move was a false breakdown. Now, we haven't taken out yesterday's lows just yet, and the day is not over, but we are trading back below that profile support level. And a second close below that, 68.22 that is, 65.71 becomes a price target. The NQ is pulled back to its buy zone. It found support there yesterday. Maybe it'll find support there today. 25.283 is the area where it found support. That's the top of the buy zone. The bottom is at 25.123. On the Dow Equity Future contract, much like the ES Mini, closed below, back above profile, and now we're back below it again. Now, we are trading below yesterday's low out there, so that would suggest that we would head lower, at least test the low from 2 days ago. In the case of the Russell 2000, which is attempting to form a new profile, we are now trading below that profile. The bottom of that profile is at 24.55.50 out there. We haven't taken out yesterday's low, so it says, hey, go check out the intraday charts to see what other kind of signals we might have out here. Well, let's go do that. Let's move over and take a look at the day trade. Let's begin with the NQ, which is moving back towards that buy zone of its daily profile. Now, when you get to the buy zone of a daily profile, if that's going to be support, usually you'll see some kind of bottom signals on the intraday charts out here. Well, so we also have testing yesterday. So you can see we're testing yesterday's low, by the way, 25,282. Let me just make sure. I think that's the number, but 25,282. Now, what you can see on an intraday chart, such as the 5-hour time frame chart, if we close below that, yes, we have support still 25,123, but the 5-hour message would be signaling an A to B equals CD to the downside with an initial price projection of 24,768 out there. On a 4-hour time frame chart, I don't have any kind of a bottom signal that is present. The 120 has triggered a Rhodes momentum indicator signal as it moves back into this hammer candle. That hammer candle's, I think that's got that same low, 25,282. It does. You know, what we say is that if you close below the bottom of a hammer candle, if you're long, you're wrong out there. You've got the 60-minute testing a prior TD9 count breakout. So there's a bunch of support here. Not so much with regard to bottom signals, though, but getting back to a prior level swing point where we had some significant bottoms can, in fact, be a bottom signal. Now, the 15-minute time frame chart is likely going to form a TD9 count bottom. It just simply needs to close below. That is, needs to close below 25,510 in the next 3 minutes out there. So that seems like a likely outcome. So the 15-minute time frame chart and the 10-minute, which just formed a Rhodes momentum indicator bottom, is suggesting a rally up towards. There's two levels. So the first level of resistance we're going to see is between 25,367 and 25,395. That is a 10-minute bearish structured sell zone, if you will, of that profile. If price can clear the 25,393 level, then price should make a move up to the 15-minute oscillator and change line. The same is true for the 10-minute, but the 15-minute would be at the 25,502 number out there. So I would expect at least a brief rally as price has gotten back to that key area where it found support yesterday, the daily buy zone, on those other swing points. But again, what you also know is a close below 25,282 could open up the kimono for a move back to that creates an A to B equals CD pattern. Now, if we look at that B to C retracement visually, that's maybe a 0.382. It's certainly not a 61% retracement. So if this A to B equals CD pattern were to come to fruition, it more likely would do more than a 1-to-1 price C to D leg to the downside. So that's what's going on with the NQ. Let's go check in on the ES Mini out here, see what it is doing, try to do the same thing, see where this is trading back into, if there's any kind of levels of support out there. But I believe the only one with a real level of support out here in a daily time frame right now is the NQ. So the NQ is one that I'd be focused on with regard to what's the market's next intent. Now, we have not gotten back down to the lows in the ES Mini. And if we take that out, we're really going to trigger an A to B equals CD to the downside on the other intraday charts. So let's just open up the 5-hour time frame chart. Let's go ahead and draw that pattern, and it will exist on all of the intraday charts out here. So the A point's going to start with our high from 4 o'clock in the morning back on looks like October the 29th. That's going to be our A point out here. The B point we're going to use is the low from 2,300 hours. This was, looks like, last night. So that's our B point, and then I'm just simply going to copy and paste just to be able to give us a to B equals CD initial price projection level out here. So let's move this point over, and that's going to give us a area of about 66.52. Now, we don't have that signal just yet. Price would need to close below 67.4850. So 67.4850, that's the number for the ES Mini you definitely want to keep an eye on. If we get that, the intraday charts are going to suggest lower price. There's nothing on the daily to stop it from heading lower. You got the same TD9 count pattern on the 15-minute and Rhodes momentum indicator pattern on the 10-minute chart out there. We'll finish those off when we come back from this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So the number on the ES Mini for the A to B equals CD pattern, I think I gave that to you, but just want to make sure it'd be a close below 67.4850. Now, what's cool about the nice TD9 count pattern and Rhodes momentum indicator signal for the 10 and 15-minute time frame chart is the TD9 count has completed out here. And if we get a 15-minute close below 67.5425, that signal will have failed and suggest that we continue to head lower. Obviously, we would go tackle that swing point that we're taking a look at. If we close below that, that triggers an A to B equals CD pattern to the downside. Now, the initial price projection on that is around the 65.52 area out there. No other intraday no other intraday bottoming signals other than getting back to those prior swing points that generated bottoms, such as on a 16-minute time frame chart. We got down to that low of 67.4850. The next candle was a bullish engulfing candle that went ahead and confirmed a Rhodes momentum indicator bottom. So we are approaching that level of support as well. If we take a quick peek at the New York Stock Exchange, its advanced decline oscillator, as well as the spot VIX index, here's what we're going to see. There is plenty of energy to be able to push to the downside. The market is nowhere near being oversold at this stage. How do we know that? If we take a look at that bottom left-hand indicator, the advanced decline oscillator, that's the difference between the 50 and 39 and 19 period exponential moving average of the advanced decline line. When that gets down to minus 150, we get to oversold readings. When we get up to plus 150, those are the blue lines that you see. You see to the downside, you see a minus 150 and a minus 250 out there. And typically, take a look at this. It's really a cool tool and indicator. If you look at the last time we got to the oversold condition, it was on October 10th. We made that move in essence, in one single day to get oversold. And what do? We worked that off and rallied all the way back up to its highs out there. So now you've got basically a double top. Do you need a double top? No, because on the New York Stock Exchange, you've got a TD9 count top and a Rhodes momentum indicator out there. So on the spot VIX index, spot VIX yesterday tested and rejected the 50-day exponential moving average. That was at 1746. We're back above the 50. Well, we always were above the 50 days. So in this instance here, both of these charts indicate that sellers have an edge out there. All right, Stevie, let's go ahead and close those charts out. Is there anything else to look at this moment in time? I think the answer is no. We're trading well below the perigee pivot points that came in last night. right around 540. It was 542 or 547. I think it was 542 in the evening. So for those of you that track that, you would have been marking the close of the futures contract and open last night to give you that feel for where that support or resistance area would be. Let's go take a look at the first request that came in. It was from, where are we at here? FFIV. For JB, and he's not in a position, but is considering a position, I believe. So here's what we know on the daily time frame. I don't have any kind of a bottom pattern. There is a to B equals CD pattern to the downside. If it were to generate a bullish reversal candle, that would give you your first potential signal of a possible bottom. We don't have that. We are in bar number 9, but the low of the pattern is bar number 7. Price must tick below that low being 239.94. Doesn't have to do it today, would have to do it tomorrow. If it did that, it would then trigger a TD9 count bottom pattern. Short of that, it needs a bullish reversal candle to generate a by the D point pattern. I'm not even sure that the retracement is enough to even validate that. If we look at the weekly time frame chart is trading into its swing point from April 11th. That swing point had volume of 3.7 million shares. Now we closed into it last week with 7.8 million shares. When you close inside a swing point with volume, here was twice the volume, it increased the odds that you're going to go test the lows. Well, we're trading below profile support. We're trading below its oscillator and change line. We're trading into it. Even this week here through Thursday, we have volume of 4.7 million shares, 4.7 versus the 3.7 on that swing point. So this is really suggesting that forget the daily time frame chart. The weekly's telling you that it wants to get down to test that low, and the monthly chart has us trading below profile support right now. So F5 out there is not looking very good. If you're looking for an entry point out here, I would be patient on this one based upon the volume on that weekly chart and its desire to go test that swing low. So hope that helps you out. Thanks much for your request out there. Duncan Steve has a few requests. Let's get to those. The first one is NVIDIA. What do we got going on with NVIDIA? NVIDIA is now gotten back inside its daily profile out there. Could be signaling that it wants to make a move to profile support. Turns out profile support on a daily time frame is its buy zone. How are we going to know if price is going to get back there? Excellent question. The answer to that, Duncan, is price must close below the top of its weekly profile. That is the level that it is testing right now. We tested and rejected it last week. Maybe we do that this week. It being 189.31. So price has found support right now. It's tested the top of that profile. If tomorrow, today's Thursday, right? Yeah, if tomorrow we close back inside that weekly profile out there, that's what then is going to suggest a move back to its buy zone between 180.30 and 183.85. If we were to get below 180.30, then we'd be looking at 179.85. Then we'd switch over to the monthly oscillator and change line. That's going to be 177 or maybe 175, or I'm not sure what the number would be, but we'd certainly take a look at that out there. That is what's going on with NVIDIA, Duncan. If you need anything else, let me know. Otherwise, let's go on to your next request, which was to take a look at AMD. We look at AMD out here. We've got this trading below the bottom of its daily profile. That's at 245.98. Now, that is actually triggering a Rhodes momentum. It's confirming a Rhodes momentum indicator top for its daily time frame. So where's the next level of support? Well, it turns out that on AMD, the next level of support would be the weekly oscillator and change line. So that's all the way down right now, presently printing out at 211 and change out there. So likely that number would be lower. But that becomes its next price target. Now, AMD needs 2 closes below 245.98 to trigger that message. If it does, then we have a daily change in trend, profile change in trend, and likely AMD pulls back to that 211.25 level. Could get lower, but that becomes the next target to the downside for AMD. On a weekly time frame, has it completed? Has it made the initial A to B equals CD price projection level? Let's go find out. Let's just put the A to B equals CD. Let's go good and grab it, move it over to the B, and it has. So the weekly time frame now, Duncan, is about to suggesting that we're going to get a sell the D point top, a 3-river evening star pattern out there. So if we get that, that helps the idea of getting back to its oscillator and change on of 211 and change out there. And below that, again, the profile levels around 183. Monthly chart looks good, at least looks good at this moment in time. So that's what's going on with AMD. Let's go take a look at Palantir out here. See what that is doing. PLTR is a ticker symbol. It is trading out as we speak right now at the price point of 178.96. 178.96 takes us below its bullish structured profile. So this formed a Rhodes Momentum Indicator top 2 days ago. We're now below its bullish structured profile support level. We are now generating a weekly Rhodes Momentum Indicator top. And we have a wave number 7 signal on the monthly time frame. Now, that needs a lower high. That couldn't be confirmed until the end of December out there. But nonetheless, and I don't really have an A to B equals CD pattern. At least I don't believe I do. I can put in the A to B line out here. Let's do that. Let's put this to there. And let's go ahead and move this over. Just see if we've gotten to that price point area out here. So I'm just going to grab this, move that to about right there. Oh, I take that back. We have. So the monthly chart for Palantir, this is interesting, right now is generating a sell the D point top. It is only November 6th, so way too early to call, but it does flash the caution sign out there. So where's Palantir headed to next? I would say more likely than not the 147.11 to 161.40 area out there, with potential pit stop in the 150 area. That's the monthly oscillator and change line. Looks like Palantir's got much lower to go. It does have daily breakout support at 156.37. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at the charts here for Carvana. This is for ELO. Carvana, I see a gigantic A to B equals CD pattern to the downside out here on the daily time frame. Let me just make sure that the B point, which I would be using the October 22nd low out there, that had volume of 5.8 million shares. It was passed with 12 million shares. Wow. So let's draw that pattern there. You've got a confirmed A to B equals CD pattern to the downside. There's your A to B point. I'm just simply going to go ahead and move this over to the C point out there to give us that price projection level where this is likely at least initially targeting. That price point is going to be 281.90. I don't see any other kind of daily bottoming signals out there. So that's where price is headed to. We're trading on the inside. The left-hand side of that C to D leg on the way down suggests doing more than a one-to-one move. Now, if we look at the weekly time frame chart, if tomorrow closes below, it's testing its buy zone. The buy zone is between 299.74 and 323.84. The key level there, though, is the 299.74. We're trading below that right now. If we close below that, we're trading below. Last week we closed below its breakout level. That's going to then add to the idea that we do at least get down to that one-to-one level on the daily time frame, 281.90, but more likely lower price than 281.90. Where would that be, Steve-O? We'd have to go with 254.29. Why? Because 254.29, let me make sure here. I believe that is the center. Yeah, that's the center of its monthly profile. The monthly profile last month confirmed a Rhodes Momentum Indicator top. 3 months earlier, it was 2 months earlier, it was a wave number 7 top. So you got a pretty significant top on the monthly time frame. I would say more likely than not, this month it's going to close lower as well. This typically, if we take a look at Carvana and open up and we take a look at its normal cadence out here, what we've seen since it bottomed back in 2022 is we've seen two-month retracements out there. So I would say that more likely than not, October is going to close below September's low. We're already trading below that. And I would suggest that we head towards the 254.29 level. Below that, you could be looking at 174.76 out there. So Carvana, not looking good. It's got tops for all 3 time frames out there. I hope that information helped you out, ELO. Let's go take a look at Coney. C-O-N-Y is the ticker symbol. Boy, had some great Coney Islands in Detroit, of course, and but that's enough for the next decade, I hope, because a little indigestion can't take place. So looking at Coney, C-O-N-Y, it looks similar to the chart we just looked at out here. So Carvana, Coney forms a TD9 count top on the daily time frame on October the 10th out there. Now, and it forms a TD9 count bottom on October 22nd. That's going to be the B point of our A to B. Let's just see if the volume metric is there. On that October 22nd day, 27 million shares. When we passed it with 29 million shares. So yes, indeed, you do. You've got a daily confirmed A to B equals CD pattern to the downside. So let's do the same thing. Let's draw in the A to B point. Let's move that over to the C point. That's the next higher high after that B point. And now I can give you a price projection. That price projection for Coney, for its one-to-one A to B equals CD price projection, gets you down to about $5. So that's what I'd be looking for, is when we get down towards that $5 area, watch for a bullish reversal candle, Phil. If you get that, that would generate a buy the D point pattern. The weekly is going to need some help too. What do you mean by that, Steve-O? Well, the weekly had a TD9 count bottom pattern from September in 2026, and that held up. That was tested last month. Right now we're trading below that. So it's looking like we still, and we're going to close below that tomorrow. So that pattern gets negated out there. It's got the same A to B equals CD. We don't have to put that in there. The monthly time frame chart for Coney is testing its hammer candle, Rhodes Momentum Indicator bottom from April of 2025 out here. That low is $6.11. We're trading at 554. So on a monthly basis, of course, we close below that and negates that signal and says we have lower. This doesn't look good. C-O-N-Y, Phil. You're asking how low can it go? It can go to 0. But we're not going to go there just yet. Right now, let's take it one step at a time. And it's that A to B equals CD pattern that it is targeting. And, if you're watching it, right back in as it gets down towards that target. Let's see if anything new has arrived on the charts. Let's go to XPEV. This is for GTE. Let's go see what this is doing. I believe it is testing Yeah. So it tested a prior swing high. Did it get all the way up there? Let's find out. No, in fact, it's interesting. It's got three. Oh, maybe it did. Yeah, it did. So I'm looking at the high in the daily time frame, October 2nd, 24.53, got up to 24.60. So volume today is 18 million shares in a little over 2 hours of trading. It was testing that swing point with 7 million shares. So even though we're rejecting it, it's going to get back up there. Now, when I say back up there, that's either going to be the low of the swing point, which is at 23.66. We close below that. Or if we close inside there, you'd go back and test that high at 24.53. Now, there's one other swing point that it's testing and rejecting at this moment in time, and that's the one from August 26th, and that had 12 million shares. Again, today so far, we are doing 18 million shares. So that says we get up and we test that as well. So at a minimum, price you get up to test that low, which is 23.95. On a weekly time frame chart, price is testing a TD9 count top. We are trading inside that. We closed inside it last week. Let's check out the volume. It had volume of 104 million shares back on that March 14th date, that TD9 count top, 104 million shares. Last week we closed inside it with 41 million shares, so light volume. So the weekly chart, not as bullish as the daily chart out there. Nonetheless, we're still trading inside that TD9 count swing point, and we are trading above profile, the screen oscillator and change line, so it's more of a neutral signal. The monthly time frame, we're trading above resistance, profile resistance, oscillator and change line, so that too wants to move higher. So watch that daily time frame as it retests those swing points. If it does that on lighter volume, then it tells you it's getting ready to move lower out there. So that was XPEV. Let's go take a look at PALL. We looked at this yesterday, I believe, for Jambalaya. Today we're looking at it for Captain Dan. So let's pull that chart up. And the question is today a buy? Well, the answer to that question is no. At this moment in time. Why is that? So there is a TD9 count bottom pattern that formed on October 28th. The low there is 124.42. We're trading at 124.43. So let's see if it's going to break that. If it closes below 124.42, volume there on that bar was 466,000 shares. We're pushing into that right now with 159. That's a 450,000 share a day if we keep up that type of volume out there. So I'd wait out here, Captain, because if price closes below that level, or you can do it two different ways. If you want to take a long trade, you take it now, you close it. If it closes below 124.42, and especially if it's with more than 466,000 shares, why? Because that would trigger an A to B equals CD pattern to the downside. Let's go ahead and draw that in. We don't have this confirmed just yet. We won't have this confirmed until the end of the day out there. And even if it passes with light volume, it is still an A to B equals CD pattern to the downside. And that would then suggest that PAL would want to run all the way down to the 109.30 area. I believe that came up at 109.30. We are not there yet. I'll finish looking at PAL when I come back from this break. Steve Rhodes with TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We'll go back to Pal here just in a moment. I wanted to, take a look at what's going on inside of the equal weighted ETFs. We'll come back to this, but I just wanted to at least get these charts here populated so we can take a look and see what its messages are to you and I. So as soon as this next spy, so this is the comparison of the equal weighted up top and the weighted version down below. So again, we'll come back to this set of charts here, but first let's get back to Pal. And I believe that is right here, PALL. Nope, that's BGS. That's the next one we're going to. PAL is then here. So now we take a look at PAL. So this is suggesting, again, we've talked about the daily enough. The weekly time frame chart, your levels of support are 122.96. That's the oscillator and change line, and profile support at 120.60. We close below profile support on a weekly time frame out there. We're likely not going to see a bottom anytime soon out here. And if we close below 120.60, that's also going to add to the idea that this is doing that A to B equals CD pattern on the daily time frame, with 109.30 being the price target. So no, now is not the time to enter. Let's come back to it tomorrow. If it holds that TD9 count bottom on the daily time frame, we need to check out volume on that. It still would be risky, but that would be your only signal that of a entry into PALL. Let's go take a look at BGS. Brent sent this in. He said, Steve-O, if you want to show the folks the power of the TD9 count pattern, pull up BGS out here. And I know that Brent is in on this trade here, and look at that day. Yesterday was the completion of the daily TD9 count bottom. And look at that rally. That rally has already taken it up above its TD9 count breakdown level that was established by that TD9 count pattern, and that's at 464. That is a strong move out there. Why did price stop around 497? Excellent question. We have the answer. The answer is, look at the top of the weekly profile. That is at 495. So you're up against your significant level of resistance out there. Now, if price can close above that profile, I'm going to open up the charts for BGS. That's going to be a very bullish signal out there. We can see last time that it rallied, it ran into resistance back here on March the 14th at the top of its weekly profile as well. So that's the area that right now price is dealing with. I don't think it's a volume issue. I mean, the downdraft on the weekly base, I guess you'd go against May 9th. It was down with 39 million shares. So far this week, we're up with 14 million shares, but we're not really going there. What we're doing is we're going to take a look at if price can close tomorrow above 495 out there. Not like 497, but above 495, then you're going to have a fairly decent signal that you've got a good breakout going on. Now, if you get that, Brent, then the next level of resistance is going to be 543. But right now, 495 has got to prove itself to you. But thanks for sending that in, me being able to share that with listeners out there, and have a terrific day. Mohammed wants to take a look at light sweet crude. So let's pull up the light sweet crude chart, see what their message is to you and I. Looking at the daily, the weekly, and the monthly. We'd already discussed, I believe, the daily. Maybe I did that during the 11 a.m. update. Here's what we know about light sweet crude. It is trading below its red oscillator and change line. When you trade below a red oscillator and change line, it increases the odds of a further move lower to support. In this case here, Mohammed, the first level of support on a daily time frame, assuming we close below 59.60 today, is going to be 57.95. That's on the daily time frame. The next level will be 57.29 on the daily, and then 56.62. But before price gets down there, price must close below tomorrow the bottom of its weekly profile. And that level out here is at 58.84. What did we get to as a low today? The low today is at 58.83. As Brent said, the TD9 count patterns, those are helpful to us. We also know that these profile levels are helpful to us. We'd be flying blind without them. And they work so well to assist us with being able to interpret the message of the market. So right now, if we were wondering, hey, Steve, price below that red oscillator and change on the daily time frame, it should cruise to the downside. Not so fast. We've got to see what's going on up above as well as what's going on down below. We don't really need to see the down below just yet. Well, we could open up that intraday set of charts out here because we're near level of support on the weekly, but the daily's not near level of support. The monthly time frame, we're trading below profile support here as well. Price has gotten down and tested 3 different times. Its breakout level, that's at 56.81. That seems like a very likely area to head to as well. So we take a look at light sweet crude. It's signaling to you and I lower price under the assumption that we get a close tomorrow below the price point of 58.84. So I hope that helps you out, Mohammed, and thanks so much for your request. GT wrote back in and like to take a look at one more instrument out there, and that's the emerging markets, which should be trading higher today with the dollar moving lower, but it's not. Well, what do we know about the emerging markets? We know on the daily time frame, you've got a TD9 count top. And now price is back inside its profile. It got back inside there 2 days ago, closed back above it yesterday. And now we're back below that level. Sounds like the exact opposite of the ES mini out here. Nonetheless, if we do close below 54.71 for 2 consecutive closes, we're likely to go make a move to 53.80. 53.80 is the TD9 count breakout support. And below that, the EEM would want to target profile support at 53.10. The weekly time frame doesn't have a topping signal, so it is the daily that is driving the bus out here. Now, as the daily drives the bus, the next level of support on the weekly time frame is at 54.16. That would be both the daily at the top of its profile as well as its green oscillator and change line. That should be strong support. But if we close below that, it tells you, well, that support wasn't so strong, and maybe we're starting to head lower. And lower on the weekly chart would be 53.09, then followed by 52.02. The monthly time frame chart could form a TD9 count top this month, but we won't know until the end of the month out there. So on the daily, I'd be watching 54.07, 53.80 next, and below that, we'd be looking at the well, then you'd already be inside the top of that weekly profile, be looking at 53.10. So that's what we see out there. GT, hope that helps you out. Thanks for your request this morning. Much appreciated. I don't see any other requests. I'm just cruising through the den, make sure I have not overlooked anything. And no, I don't think that I have. Now, let's take a quick peek here at Nike. Because here's what it's going to do. We might forget to do this tomorrow out there. If we do forget, Dan inside the Tigers Den will not let us forget. And that is, if Nike produces a daily bullish reversal candle, it's going to be a buy. I'm just going to pull up the chart so we can take a look at it. It wasn't a bullish reversal. Oh, son of a gun. Is that the chart? Hold on a minute here. It is. I'll be a son of a gun. Nike generated a key reversal bar yesterday. Danny, you hearing me? Nike generated a key reversal bar yesterday. What does that do for us? That generates, that completes, that gives us a buy the D point bottom pattern out there. Here, I'll show you the A to B. So I'll draw in the A to B point. We'll move that over to the C point out there. You'll see the full, this is the 1-to-1. A to B equals CD price projection level. There we go. You can see we're basically down at about the 1 to 1.272 area out here. You closed it yesterday. Well, good. And you should have. Excellent. You got that bullish key reversal. So the daily has got to buy the D point pattern. Now, that may just be a counter trend move up to its oscillator and change line, even the bottom of its profile. But Nike ought to rally towards the 63.58 to 65.87 level. The reason why I say it's a buy and why I even brought it up is because the weekly chart is completing a TD9 count bottom pattern at profile support at 61.02 out there. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back. We're looking at ticker symbol IOVA. And, we take a look at the daily time frame chart. What we can see here is it's trading below the swing point from all the way back in August of 2025 out there. The low on that swing point, by the way, is $1.90. Now, you can see that's an A to B leg. But if I go ahead and I put that in there, this is going to be a negative. It's going to tell you that it's going out of business. So we know that, putting that A to B equals CD pattern doesn't make sense. There's a smaller one we can most certainly put in place out there, and that is, and let's draw that one in. So I didn't mean it. Oh, where's that going to open up? Shoot. Okay, let's get back. Oh, I did it get twice in a row. Steve-O, what are you doing? Okay, we'll get this, the third time's a charge. So the A to B level, there we go. So here's our A to B point, approximately. Let's just move that over to the C point out here. Wait a minute here. Hold on a minute. I missed something? No, so this is rally today. So I can't even draw that A to B equals CD pattern. So on a daily time frame, actually, we're trading back above that swing point. My apology. Yesterday, we closed below that swing point. So right now, IOVA is ran into resistance, Dan. Run into resistance. That's at 235. There's two levels of resistance on its daily time frame. And the first one is 235. It's the top of its daily profile. The second is 246. It's TD9 count breakdown level. That's the area that price needs to close above to suggest that we've got some type of bullish signal, because it's certainly not a pattern that I've got out here. Unless that A to B equals CD pattern completed, then the gap to the upside would be the bullish reversal candle. But it's trading into resistance on the daily time frame. It's trading into resistance on the weekly time frame. Resistance here is the weekly top of its profile. That's at $2.27 out there. The monthly chart. I don't think I have anything low. $1.66, $1.67. Yeah, I don't have any kind of bottom signal on the monthly chart out there. So not the best review of an instrument, but I can tell you it's trading into resistance. So I hope that helps you out. Folks, stay tuned for all the great programming. I'll be back with you tomorrow at 11 a.m. sharp. I want you to have a terrific Thursday out there. Be safe and take care.